Hello, this is Vince from Sniper Day Trading. I'm back, second video. This is the smaller time frame I was talking about. This is the higher time frame. Don't have it listed. Some of you may have seen it or figured it out from previous posts, but I don't usually list them. But this is the same chart, the same day. These are signals in the higher time frame chart and are designed to capture bigger point returns. They're matched up with some of the other methodology in my trading program. So these are the trades after the open. Short, another short. Now some of these I'm not going to go into the details of the method and how it all works, but I'm just showing you the raw signals. Occasionally, well, we do, like over here, this was an add-on trade. I probably would have passed this up, and there's definitely some discretion that otherwise it would turn into a system, and systems, basically take all the trades as they're given, and this is not a system, it's a method. So you can screen out the trades that don't measure up. These do line up with not only my method, but the indicators that I have created. They're common indicators, but I've adjusted them, tweaked them, twisted them, turned them upside down, and kind of somewhat made them my own. But in any case, these are the trades just after the open. Short, short again, long. This was the bottom. I was a little anxious down here. I did notice and find that this was the bottom, and got a little too anxious. Just didn't do enough preparation and before I got started to be able to catch the rest of the trades. Those were virtually all winning trades after that. The next turning point, the next add-on turning point. This was another spot, but probably would have skipped that if I was still in the trade. I may have gotten out of the trade in here and may have missed this, but things like that. But those are the rest of the signals generated. There's a short in here. This probably be stopped out. There was 1.25 in here from that entry. If you scaled out of some of the trade, then you'd be fine. You'd be looking at possibly a break even. Maybe after it came back up, you'd probably be at break even. I'd give it sometimes a little extra room in these trades to retrace against me, but after the second time retracing against me, probably not that much. I'd probably at least have it break even, and so that's why we're looking at that break even spot there. Here's a new entry long, and this moved a point against you. It moved a point for you and a point against you, and then generated another signal over here. Typically I run a 4 tick stop, just 1 point. But if I was only trading out of this chart and higher time frame charts, the next higher time frame chart, if this was my low base entry chart, probably give myself an extra tick, maybe 5 ticks to trade this. And then there was another add-on trade, kind of somewhat of a blow off top up here, and then it kind of a failure right in here. And these are all backed up by, like I said, the indicators that I use, and also the methodology. The indicators aren't really that important. I mean, for some people they will be, but I can look at these, look at this chart and see the price action and know that those are exactly. In fact, that's how I marked them up. I marked them up according to the price action as the price action would dictate, and then I came back to look and see that actually all the indicators, if I were to put them up, they match like perfectly. I mean, to the tick. So it's the indicators are there to kind of help you see what's already happening in the price. The price is really what's going to determine what things, what direction the market is going to take. So nonetheless, that is that, and maybe I'm going to pause this for a moment. I'll mention something else. Okay, I've got 30 seconds left on this video. This is the Dow, the Nasdaq, and the Dow, the Nasdaq, and the S&P on top. Just notice that red trend line there. That line goes all the way back to the March lows, way back. And before that, this was in my blog. I have an audio blog that I talked about how the support, once that was broken, that we were going to go down. So we broke down by a lot and moved up. But you can just take a look at the price action from there. We need to stay